Union Budgets 2024. So with this session, we are going to discuss about the income tax update. We are only limited to our discussion to the income tax updates, which is covered in the Union Budget 2024, and we are going to highlight all the important aspects covered under the budget related to income tax only. The numerical portion or the number portion under practical connectivity and the impact of these changes we will discuss by the separate session of the each topic. So it's my request to be stay connected for those sessions which we going from the practical perspective. Okay, so while going ahead with this union budget, first we will discuss, I want to highlight what we are going to cover through this session. So first we will discuss the standard deduction changes, the family pension, tax slab and tax rates, capital gain tax, TDS, TCS and employer NPS contribution. There are a little bit more changes has been introduced which we will cover with the practical aspects separately, like an assessment and all. Okay, so first we will discuss about the standard deduction. So this topic is related to the income under head salary. That means if you are a salaried employed or if you are calculating for the purpose of salary, then standard deduction is a deduction which is given for the salaried employees, which has been increased from 50,000 to 75,000, which provides a more relief. That means earlier in the old regime you was allotted rupees 50,000 as a standard deduction, but now with the effect of budget 2024 you will be eligible to receive 75,000 as a standard deduction. So the standard deduction has been increased, providing more relief, which is only limited to the salaried employee. I am only focusing to the salaried employee, that is an individual. Okay, moving ahead with our next update is family pension. Okay, so the family pension for the pensioner is proposed to be enhanced from 15,000 to 25,000. So earlier the family pension was limited to the 15,000 rupees only, which is now extended to rupees 25,000. This is again only have a good impact in the case of individual. Okay, and don't worry, we are always going to connect these pointers as a numerical or as a numbers form for practical understanding. Okay, next update is the tax slab and the rates. The new tax regime, it's very important to focus, it's not applicable for old regime, it is for the new tax regime. The rate structure is revised. Again, for the salaried employee is the beneficial up to the 17,500 rupees. Okay, so these are the slab changes. From 0 to 3 lakh rupees there is no taxation. From 3 lakhs to 5 lakh rupees there is 5% rate of tax. 7 lakh to 10 lakh it's 10%. 10 to 12 lakh it's 15%, and 12 to 15 lakh is 20%, and above 15 lakh is 30%. All these pointers are already shared during the time of budget in the community section. If you want to reconfirm the data, you can reconfirm from the community section also. So this is the revised slab which is applicable only in the case of new tax regime. Okay, but if you have still any query related to any of the updates we discussed so far, feel free to ask in the comment section and stay connected for the numerical approach. Next update is related to the capital gain tax. That means in your earning from capital gain, either it from the short term or the long term. Okay, so short term gain has been attract a rate of 20% on certain financial assets. Remember, it's not on all assets. There are certain financial assets which attract 20% of the short term capital gain. Clear? Long-term gains on all financial and non-financial assets attract 12.5%. That means earlier it was 10%, which is now exceeded to the 12.5%. That means even you hold the financial assets or it's a non-financial asset, maybe on a land or anything else, the long-term capital gain rate is revised and increased to 12.5%. Clear? Okay, the limit of long-term gain exemption of capital gain has been increased to 1.25 lakh per year to benefit lower and middle classes. That means earlier it was 1 lakh. That means if you have a long-term capital gain of 1 lakh, that is totally tax-free. Okay, but if it's exceed 1 lakh, you have to pay the long-term capital gain, and this is now revised and increased to 1.25 lakh. That means 1,25,000. If you have a long-term capital gain of 1,25,000, it is exempt and not taxable. Or if it's increased to 1.25 lakhs, it will be taxable at the rate of 12.5%, which is the revised rate. Okay. Next, listed financial assets. So we learned two type of assets in case of long-term capital gain. If you can see, okay, both in long-term and short-term, financial and non-financial. Financial, we can use stock, bonds, and all. Okay, so listed, those are listed financial assets held for more than a year. So if can be, for example, are stocks. And unlisted assets, focus listed financial assets and unlisted all kind of assets. Unlisted all assets, financial and non-financial, held for more than 2 years, classified as long term. That means if the shares are listed, that means any of the financial asset listed, financial asset listed, or unlisted asset, it may be financial or non-financial. So listed financial year limit is 1 year. Unlisted financial and non-financial is the 2 year. If it's exceed these years, it will be termed as a long-term assets. I want to clear once again. Listed financial asset for more than a year and unlisted asset for more than a 2 year will be classified as long-term capital asset. I hope it's clear now. Okay. Unlisted bonds, debentures, debt mutual fund, market-linked debentures will continue to attract the applicable capital gain rates. Means same, the old provision will applicable. I hope it's clear. So we have seen a change of short-term capital gain, but only on certain financial assets. So that certainty will be cleared with the help of notification, and we'll discuss after the notification the detail about it and even the numerical perspective, the practical perspective. Okay. The next amendment or the update, we learn about the TDS and TCS. So 5% TDS on many payments to be merged into 2% TDS. That means those were the payments while making a payment, there was a 5% rate of TDS, now reduced to 2%. The list is not yet been issued. Once it will be open, we will be shared it. 20% TDS on repurchase of unit. Repurchase of unit by the mutual fund. So mutual funds and UTI sometimes repurchase the units. So 20% was the TDS which was withdrawn now. Okay. TDS rate on e-commerce operator reduced from 1% to 0.1%. Okay. Now the credit of TCS will be given on TDS deduction from salary. Again, a very important perspective for the viewpoint of individual who is holding a salary income. So if you have a TCS credit in your books of account, that can be adjusted against the TDS. Okay. Budget decriminalized the delay of the payments of TDS up to the date of filing of TDS statement, and standard operating procedures won't be simplified. So it's just a procedural requirement mentioned in the budget. Okay. The next update is the employer's NPS contribution. So we are only limiting to the NPS contribution. So the contribution limit for employers, focus, it's the employer's limit which is fall under the budget session. So the contribution limit for the employer in the private sector, focus, employer, private sector towards the national pension scheme, that is an NPS, has been increased from 10% to 14% of the employees' basic salary under the new tax regime. So I'm focusing on some point. It should be a new tax regime, and the employer contribution, who are the employer, the private sector companies as an employer, and contribution towards the NPS only increased from 10 to 14% of the basic salary under the new tax regime. I hope it's clear. Don't worry, please stay connected for the detailed updates of every pointers and the practical approach. We already covered our complete detailed understanding of the income tax at the platform. For that, please refer the playlist, and in case of any doubts, don't take those doubts with you at home. Discuss in the comment section and clear with us. Okay, so I hope it's clear. Please stay connected with us. See you in the next update. Till then, take care. Bye bye and Jai Hind.